And welcome. It's Ellen McGonagle here with your Friday afternoon MEM Edge show. As always, the show where we bring you where the action is in the broader markets. I hope everyone enjoyed the day off on Thursday, July 4th. And certainly we were back at it today, but not a whole lot of volume. It has a feeling that a lot of traders took the long weekend, but there was quite a bit of price action beneath the surface that took place this week. And as always, I will share that with you as it relates to potential sector rotation. As always, you want to be in front of that rotation as it may begin to shape up. So some of the data last week, very much economically related. We did see the June private sector jobs growth, and it was the lowest in 5 months. From there, we did also see that jobless claims stayed at a one-year high. Factory orders dropped in May. And then today, very critical unemployment data where it rose to 4.1%. And that is the first time since November 2021 that we've seen unemployment at that level. And also wages slowed. So for the most part, traders en masse are anticipating a September rate cut. We do have some important data next week as well. We have CPI and PPI data. That's, of course, key inflation information. And Fed Chair Powell will be testifying to the House next week, and any comments made there will also potentially sway the markets. So let's go ahead from here and take a look at those markets and see where did we close for the week. And here we are with a daily price chart of the S&P 500. As you can see, we did close at another new high in price, a 2% advance. We do have a positive RSI and MACD confirming that uptrend very firmly in place. Of course, subscribers to my MEM Edge report, I will get a little more into it as I have more time relative to overbought conditions in the broader markets and what we can expect potentially going into next week. But from here, let's go ahead and take a look at those underlying sectors in the S&P 500, those 11 sectors. And I've added a relative strength indicator. We're sorting it in descending order, and let's dive in. Up here, front and center, XLY. It was the top performer, up 3% last week. And this was all about Tesla. The stock was up 27%. You'll see other areas that were impacted by that move, but certainly consumer discretionary on the move higher. And then XLC, this is communication services, and the predominant group here is going to be your internet-related stocks. Meta had a great day, and Alphabet had a good week as well. And you can see that in this overall group move to a new high in price. And then technology, XLK, another winner, up 3% for the week. We'll take a quick look at this chart, and you will see we did inch higher so that we did close at a new high. We do have this new potential uptrend signal here with that black line up through the red and a nice positive MACD RSI on that daily price chart. And moving through, I did talk a little bit about interest rates and the fact that a lot more by way of traders are on the lookout for that potential rate cut in September. And this is where that rotation may come into play at some point in time. As we see rates recede, I'll share with you a view of that 10-year yield in our next segment. But there are going to be groups that are going to benefit from a lowered interest rate environment. REIT stocks, XLRE could be one of them. These are not big groups, but oftentimes as interest rates recede, you could see a move into consumer staples and some of these higher yielding areas of the markets. Now, we are super early in this potential rotation, but it is the kind of thing that you may want to begin thinking about as we move through this economic cycle where we are seeing a slowdown in the economy. As we move through, taking a look at some of these weaker areas, these are going to be economically sensitive areas. Industrials, XLI, you can see we have not been able to regain that 50-day. We have not been able to get back into an uptrend there. XLB, another materials, another economically sensitive area of the markets. And you can see a confirmed downtrend trend very much in place there. From here, let's go ahead and advance further. Take a look beneath the surface of those sectors. You really want to be able to refine your search and make sure you are own stocks that are in that right area that are exhibiting outperformance, and they are exhibiting that outperformance for a sound reason. But first up, let's take a quick look at the Nasdaq. Also hit a new high. It advanced 3.5% last week, and this is another index that is a bit stretched above its key moving averages. I do a lot of work with historical precedents, looking at that index relative to its 50-day and what you can be on the lookout for. But at this point in time, the uptrend is very much in place. Last week, I talked about the move into software stocks, IGV, and they did have another good week. I'll take a look with you at some names in that area that are looking really compelling. Not all stocks in this group are participating, but those that are looking really quite strong. Moving through semiconductors, another outperformer up 3.3% last week. And those of you that own Nvidia will have a feeling that it didn't participate quite as strongly, and you will be correct. Nvidia ended the week up about 2%. We're going to look at that stock relative to the other magnificent 7 names and really show you what is shaping up in those bigger mega cap tech names. And then moving through last week, I did talk about this move into bank stocks. This is KRE, the regional banking ETF, and you can see this move into last Friday. Very encouraging looking. We were getting positive momentum signals, but take a look. This is a pullback that is taking place, and this is another economically sensitive area that has a predisposition to not fare well in a declining economic backdrop. And also taking a look at small cap stocks, they were down 1.2%, and small caps also are going to be very sensitive to potential slowdowns in overall growth. I did mention that we can take a look here at that yield on the 10-year, and a nice drop. We are now down at 4.27. And of course, ideally, we would love to get down further. This is that move back here in November into the beginning of this year. And we did experience a very significant rally, particularly in growth stocks back here. So we are certainly heading in the right direction. That CPI and PPI data is, you're going to need to keep an eye on that so that we can see this continued confirmation of interest rates developing and moving lower. I did mention to you the Magnificent 7 stocks. Let's take a look at a 2-month daily price chart view of those mega cap names. And I did mention to you Tesla was on the move higher. It was really big volume on this rally. You can see that we got into a very overbought position here with that RSI. But again, that high volume could point to further upside from here. I'm just going to pull up a weekly chart and share with you that this MACD is just now getting into positive territory. Would I buy it after a 27% rally? Not so much, but we can go back with historical precedent and see what you can be on the lookout for by way of a pullback and a possible entry. And then from here, next up, again, I did sort this by relative strength. And interestingly, Microsoft is up here at the forefront, and this stock did also have a good week. It was up 4.5%, nice charge to a new high with positive momentum. And then as we move through and take a look at some of these other names, Apple also far surpassed the broader markets, up 7.5%. And from here, if you don't own these stocks, certainly on any pullback, but more importantly, hopefully you own either the QQQs or an ETF such as VUG that is heavily weighted in these bigger names. Alphabet up here at the forefront, the stock was up 4.5%. So I think you can garner what I'm saying here is that last week there was a bit of a melt up, but certainly really tremendous movement in these upper names in this Magnificent Seven listing. But let's go ahead and drill down. Netflix here was up 2.3%, certainly very respectable, nice little move higher, base breakout, but not a lot by way of momentum. No shift there. It is flat. And then here we are with Nvidia. It feels like the forgotten child among these M7 names, but we can also note that the stock has advanced the most year to date, and I'm sure all of you are well aware of that. So during this period of consolidation, this relatively quiet period for the stock, you want to make sure that that momentum does stay positive, that RSI is still up here above 50, and this crossover is very simply signaling that this sharp uptrend has abated, and we are in this sideways price action period, which is certainly warranted. From here, I did want to share with you in the S&P 500, it was up 2%. We did hit a new high in price. So what I am sharing with you at this point is the S&P 500 stocks within that industry group, again, sorted by relative strength. And while we did see big moves in those M7 names, and of course, Tesla, not sure if it's categorized in there or not, but I did also want to share with you that when you're looking at, in this case, the S&P 500, we're sorting the stocks in that index by relative strength. And what I wanted to share with you is that this grouping up here at the forefront, these are your strongest, relatively strongest names, and it is pretty diverse as far as that listing. We do, of course, have Tesla. IRM is a REIT stock, Adobe Software, Arista Networks up here at the forefront, a networking stock. VTR is another REIT stock. And then we do have Microsoft and Apple, but then we move into some of these discount retailers and TJX, Costco up here at the forefront, and we also have FedEx after their numbers. So there is certainly a lot of talk as far as money funneling into mostly those mega cap tech names, but this view will share with you the fact that there are other areas that are moving up to the forefront. Eli Lilly, Walmart, several of these names are on my MEM Edge report, and you would want to, of course, participate in names, broaden out beyond those M7. Of course, having a representation there would be helpful. And Juniper, this is another networking related. NetApp is another one. So as we move through, if you are looking at this type of view and there are 500 names, I am going to, because at this point we are seeing semiconductor names pop up, semiconductor related, but I just want to take us down because about, I would say maybe 150 stocks are setting up quite nicely, but we don't have to go too far, and we'll begin to see these areas that are coming and continuing under distribution in the S&P 500. And there was one name that I did want to share with you, and the reason is, and I have another one as well, but it's all about, should we see a rotation away from economically sensitive areas? You want to have a plan as far as an exit strategy that is going to be as critical, if not more, than your entry point into some of these names. So we are looking at GWW. This happens to be a name that I owned back here into this move higher. So what was for me that signal to exit was two factors. First up, we did get this close with GWW below this 50-day simple moving average. And if we draw our eye down, that break was on above average volume. So that's telling me the stock is under distribution. We also simultaneously had an RSI dip below that 50 into negative territory. Now, we did have this initial signal, but it is not a sell signal. It's just saying that we are trending, your momentum is shifting downward. But then as we continued to progress, for those that are not paying attention to this first signal, once that MACD gets into negative territory, you most certainly can know that the momentum is very seriously negative. And then from there, your 50-day simple moving average, this is a very common occurrence as the stock continues to struggle. It does trend downwards so that rally attempts are met with resistance here, but it's taking place at a lower and lower level. So that is the kind of thing that you want to, again, keep an eye out for, and then look for price movement within that industry group. This is an industrial related stock, so that is another factor that you will want to keep in mind as we keep an eye on this potential sector rotation. And then other areas that we can take a look at as far as looking at names that were big winners this year and are faltering just a bit. This is Abercrombie and Fitch, A and F. And I was remiss in not sharing with you XRT when we were looking at those industry groups, but this is the retail ETF within the S&P 500. We are seeing weakness outside of those Tesla, Amazon, and the discount retailers I mentioned to you because of high pricing. So let's go ahead and take a look at A and F. And this has been a very big winner. And we can see this move up to this new high in price, pulling back generally with the broader markets. But I did want to highlight a characteristic here, because when I am looking at these year-to-date winners, there are periods when those pullbacks are, in fact, ideal buy opportunities. The growth prospects are still there. But let's take a look at this rally here at the end of June. And what I wanted to highlight is the fact that we did close above these shorter term moving averages. Good news there. However, we did not get a confirming RSI. By that, I mean, when you have a stock approaching its prior high, you want this momentum indicator to advance as well, and ideally get back above that prior. And it also took place back here where we did not have a confirming RSI. And then we did not get this MACD crossover, which would in fact confirm that a new uptrend had taken place. So that is another factor that you're going to want to be aware of when you're looking at these year-to-date winners that are pulling back and potentially presenting themselves as a buy point. And from here, I did want to share with you another area that is not faring well, and it is also very economically sensitive, and that is XHB. This is the Homebuilders. They did come out with economic data last week that were very weak. And also with this declining interest rate environment, instinctively, there's a sense that that will improve the outlook for these builders as mortgage rates decline. However, the data may not support that. So you really want to have a good sense of how that overall group is doing before potentially jumping into an area that normally would benefit from a declining interest rate environment. And that's it for this week. Everyone have a fantastic weekend. If you like what you've seen, go ahead and hit that like button, and please use that trial button. Take a look at my twice weekly MEM Edge Report. We're going to stay on top of everything I've talked about today and more, so you won't want to miss that. See you next Friday.